Good afternoon, everyone. Hello and welcome to the Exploring Census Data webinar series. Today, we will be presenting information about programs from the economic and demographic areas that can help with policy making and business decisions. So let's go ahead and hop right into the presentation. First, a little about the Exploring Census Data webinar series. So this is a series of webinars presented monthly and organized by topic. We found that many data users are interested in specific subjects, but may not always realize that we offer a wide range of data spanning both demographic and economic areas. The webinars also include real-life use cases or questions to help illustrate how the data can be applied in practical and meaningful ways. The webinars are presented by subject matter experts with a Q&A, and you'll be able to ask questions during and after the presentations. Now, each session is recorded and posted, so you'll have access to the information again, and you'll also be able to share with anyone that may be interested. To learn more about the series, please visit the first link, and to view our past recordings, please use the second link to the Census Academy. Now here's a quick look at what we'll be looking at today. I'll begin with a brief overview of the U.S. Census Bureau to give some context. Then I'll turn it over to our presenters. Up first is Mika Kusha. Mika is a survey statistician with the Consumer Expenditure Surveys. Mika will present an overview of uses, design, and administration of the program, featuring the quarterly interview and diary components. The next is Samantha Cole. Samantha is a supervisory survey statistician and also a team lead for the Consumer Expenditure Diary. Samantha will present information about this component of the Consumer Expenditure Surveys and how to access the data. Finally, our third presenter is Rob Simon. Rob is a survey statistician with the public sector program area, specializing in state finance statistics. Rob will showcase several programs from the public sector as they relate to decision making and also do a demo on how to access the data. Then we'll close out with a Q&A session. Now, while we've set aside some time for questions at the end, please feel free to send in your questions at any time during the session, and we'll do our best to address them as we go along. And also, please note that we are utilizing technology from multiple locations, and we aim to provide you with the best experience possible. Should we experience any technical delays during our session, please utilize the chat feature to let us know of issues, and we will mitigate them as soon as possible. About the Census Bureau. The Census Bureau is the federal government's largest statistical agency, where we conduct over 130 surveys each year. Listed here on this slide are some of our more well-known surveys. First is the decennial census, the once-a-decade population and housing count of the U.S. Next is the American Community Survey. This is an annual survey of the nation's population. Now, on the business data side of the house, we have the economic census. This is the official 5-year measure of American businesses that is conducted every 5 years, ending in 2 and 7. It is the most comprehensive source for business data, and it is used for benchmarking our other business surveys and programs. Now, the economic census also has a public sector counterpart called the Census of Governments. And like the economic census, it is measured every 5 years in the years ending in 2 and 7. And this slide lists examples of a few of our widely used monthly, quarterly, and annual economic surveys and programs. Monthly surveys are a part of the economic indicators that are included in reporting the GDP. And annual surveys include nearly every sector of the economy. Now, when it comes to our data, a pyramid is a nice representation of the relationship between timeliness and details. At the top of the pyramid are high-frequency programs where data are released on bi-weekly basis with less details available in comparison to the programs on the lower levels in the pyramid. And sliding down a level are to our monthly and quarterly surveys. These surveys are timely and they include the nation's key economic indicators as previously mentioned on the slide. They are used for tracking and reporting the GDP. Now, moving down another step are annual surveys. These are surveys that provide data for nearly every sector of the economy, and data from these programs are useful for analyzing trends. Then we move down another level. We have the economic census that takes place every 5 years, and this is our most comprehensive data source for business data. And finally, at the base of the pyramid are administrative data that serves as the foundation of our statistics. And now I would like to turn the presentation over to our first presenter, Mika. All yours, Mika.
Hi, Linda. Thank you so much. My name is Mika, and I'm a survey stat on the Consumer Expenditure team. Thanks for being here today. Me and Samantha were really excited to share more about our survey and the data products that are available. So we want to begin with something fun. We're going to do a poll. You should see a poll pop up on your screen. And we are asking, do you spend more money each year on fresh A, potatoes, B, lettuce, C, tomatoes, or D, cookies, because you don't eat vegetables? So we're going to give you a few seconds to answer the poll. I see answers coming in. All right, and then we're going to close the poll in 3, 2, 1. Poll should be closed. And it looks like most people answered B, lettuce. That's what I would choose too. Well, did you know that amongst all the vegetables in the poll, tomatoes were the ones that consumers reported spending the most money on in 2023. Also, more households reported expenditures on tomatoes compared to potatoes and lettuce. You can see that under the percent reporting. But they spent even more money on cookies. So consumers reported spending over $90 annually on cookies in 2023. All right, so let's move on to our agenda. We're going to begin with an overview of the Consumer Expenditure Surveys. Then we will talk about CE survey design and administration. We'll go over the quarterly interview survey, or CEQ, and the diary survey, or CED. And then we'll move on to the CE data products. Samantha's going to share a little bit about how to access the CE data. I'll share a few examples of household spending data from CE, and then we'll close out the CE portion with the economic impact of CE. So starting with the Consumer Expenditure Surveys overview. First of all, the Consumer Expenditure Surveys are demographic surveys. So that means we measure people, not governments or businesses. The consumer expenditure data has been collected since 1980, and our work is sponsored by the Bureau of Labor Statistics, or BLS. The main focus of the surveys is to measure how consumers spend their money on a range of expenditures ranging from housing, transportation, healthcare, the whole gamut. We have a wide range of data users. A lot of people use our data for a lot of different purposes. That includes other government agencies as well as non-government agencies, market researchers, academics, and they use it for things like policy planning, demand planning, and really just to measure the economic health of US households. Probably one of the most high-profile uses of CE data is to determine the group of items that are part of the Consumer Price Index, or CPI. Our data is one of the key inputs to come up with that data, or that number. So let's move on to CE survey design and administration. So CE data represents most of the general US population, technically the civilian, non-institutionalized population, and the addresses are randomly selected for our sample. That means whatever addresses are selected are the ones we have to survey. If one address doesn't want to participate, then we can't just replace it with a neighbor. So each address that we interview has one or more consumer units. Usually it's just one, but there could be multiple consumer units. For example, if you have like college roommates that aren't related and they don't share expenses, they would be multiple consumer units and interviewed separately for our survey. And as I touched on before, there are two surveys that are part of the Consumer Expenditure Surveys umbrella. That includes the Quarterly Interview Survey, or CEQ, and the Diary Survey, or CED. So let's begin with the Quarterly Interview Survey. The Quarterly Interview Survey will sample about 50,000 addresses in 2026. That breaks down to about 6,000 addresses a month. And the interviews are done in waves. There's 4 waves for the Quarterly Interview Survey, 3 months apart for each interview, and this all occurs over a 12-month interview period. There's 23 sections or expense categories that are captured in the survey, and they all focus on high-level expenses. These are the categories that the Quarterly Interview Survey covers. And you can see the theme is either major expenses that you would remember 1 month, 2 months after the fact, like if you bought a dining room table or if you bought a vacation package. They're really big expenses, or the reoccurring expenses like a gym membership or your health insurance payment. And this diagram shows the flow of the Quarterly Interview Survey. So first, a respondent will receive a letter saying they were selected to participate in the survey. And that same month, they'll do the first interview. And usually that's the longest interview. 3 months later, they'll do a second interview to capture all the expenses that they had over the previous 3 months. That occurs again 3 months later in a third interview. And finally, there's a fourth interview, which is the final interview. So let's move over to the Diary Survey. In contrast to the Quarterly Survey, the Diary Survey is a little bit smaller. In 2026, there'll be about 33,000 addresses sampled over the course of the year. That breaks down to about 2,700 addresses per month. The interview is all done in a 1-month period, but there's 2 interviews for the Diary Survey. And in between those 2 interviews is a 2-week diary recording period. During that time, 4 expense categories capture all the expenses that a household has over those 2 weeks. We'll get into that in a moment. They're all captured in the paper or online versions of our diary. And this diagram shows that the Diary Survey also starts with the respondent receiving a letter saying they were selected to participate in our survey. An initial interview is done, and in that interview, a diary is placed either in the paper version or the online version. The respondent will spend 14 days reporting all their expenditures, and then the field representative will return to pick up the diary and do a final closeout interview. On the left is a screenshot of our paper diary, and on the right is a screenshot of our online diary. And these are the 4 expense categories that are covered in the Diary Survey. We do capture big expenses like a mortgage payment, but it's also the real nitty-gritty expenditures. Like if you bought chewing gum at the grocery store, that's going to be captured in that 2-week period in one of our diaries. So I'm going to pass it off to Samantha, and she's going to talk a little bit about our CE data products.
Good afternoon, everyone. So we're going to start out with a polling question. What is your favorite way to wrap gifts? Is it wrapping paper, where there's lots of fun options? It's fun to open. Is it a gift bag where it's easy to put together if it's oddly shaped objects? Is it an envelope where you have gift cards or money gifts? Or reusable fabrics? So you can have something used in Japan where it's like a cloth, they wrap something up, display it to someone opens it, you get the cloth back. So we're going to give you, Linda, please open the poll.
The poll has been opened and the results have been posted. So Linda will read those in a moment.
It looks like most people chose B, gift bags.
Ah, good choice. Very good choice. What's also great about those is you can get those from other people, take off the little name tag and reuse them again. Good for the environment, right? All right, moving on to the next slide here. Did you know that the amount of money spent on stationery supplies, and gift wrap remained relatively stable until around the pandemic. There was then a jump in 2020 to higher expenses, and a much higher jump into 2024. You see that spike here. Something about the post-pandemic, it really increased people's gift-giving vibes there. And that's some of the questions that CE data can answer, which is cool. So now looking at how do you access CE data. All right. So this is our CE, our BLS, our Bureau of Labor Statistics homepage, and this is where the data is publicly available. And you can see this is the CE home. And I'm going to start by going to the Methods tab. And you can see here that the options are listed in a list, or you can select this option, and it's more of like a widget form where you can see it. I prefer this, but other people may like the drop down. Either is fine. You can see there's all these different various methods that are available, including Handbook of Methods, redesign, lots of great information. You can see our survey questionnaire and materials. You have the CE publications. So this is where a lot of the things that we've already done are listed. So you have news releases. You have the CE library, which is several different things, publications and writings that have done on CE that are available, and additional publications. Moving to CE data, and you can get a little more granular with the data. There are data in tables format, and what I want to point your attention to is you can get data by single year or trend analysis. There's also a database where you can use several online tools to look deeper into your data, look at geographic data of data collected by CE, and the public use microdata. We'll get to a little bit more of that in a minute. Under About the CE, we have information such as glossary, CE products, information for survey respondents, Q&A, and events. And this is a great tab because it shows you, go to the CE library again this way, and has lots of great talks that we've done before. And also going back here for another great use, public use microdata. Down here, you see public micro use workshop. Down here, there are resources. Here's the workshop, and it has all these different presentations. Here, archives. So the archives, it has lots of information. This is the programs that we've had in the past. It has zip files for the different presentations that have done in the past, training files, and published reports. So this is lots of great information. You can get into all level of detail, or you can just get the tables that have already been published. So however much detail you want, you can get on this. And what's great is we do have a Contact Us site, and this goes to the Bureau of Labor Statistics, and they can help navigate you or answer questions that you may have. And with that, I'm going to pass you back to Mika.
Thank you, Samantha. Okay, so I just want to share a couple examples of the type of household spending data you can get from the tools that Samantha just shared with you. So first, let's take a look at the geographic means table. So the geographic means table can give us a high-level snapshot of the data, and it's based on, of course, different geographies. So for this example, we're taking a look at education spending in the New Jersey geography. And I pulled some data from 2018 as well as 2020. So overall, across all consumer units, there was decreased education spending. And I was curious why that was, because you always hear about the rising cost of education. So I did a little digging and saw that New Jersey implemented a community college opportunity grant in spring 2019, which provided tuition-free community college for 2-year degrees for New Jersey residents. And that makes sense. It follows what our data tables are showing us, because the lowest quintile of household earners had the biggest decrease in education spending. I would also anticipate that we'd see a further decrease if we were going to look at the 2023 tables, because there was a similar 4-year program that was implemented in fall 2022. The next example looks at the one-screen data search tool. This tool shows us a lot more granular data than the geographic means table allows us to look at. And we are going to look at school lunch spending. I want you to look at the characteristics line. And this data pertains just to married couples with children, where the oldest child is between 6 to 17 years old. So you can see just how specific we can get when we look at the one-screen data search tool. So from 2019 to 2020, there was a drastic decrease in school lunch spending. Does anybody in the audience know what might have happened in 2020? I think we all remember there was a COVID-19 pandemic. So of course, kids were not going to school and they were not spending money on school lunch. Intuitively, there was also an increase in school lunch spending from 2021 to 2022. But what I didn't understand, and what was maybe not as intuitive, was from 2022 to 2023, there was another decrease in school lunch spending. So that led me to do a little more digging, and I saw that the USDA funded National School Lunch Program and School Breakfast Program had a waiver in response to the COVID-19 pandemic, where it allowed all students to receive free school lunch and school breakfast. So the eligibility requirement to be low income was waived and the benefit was spread across all students. However, that waiver expired in June 2022 in most states, which correlates with the decrease that we see in school lunch spending from 2022 to 2023. So it goes to show that all the data tools that we have available for CE are really great launching points, not only to do your research, but to get more research questions. So I am going to pass it back to Samantha one more time to close out the consumer expenditure portion with the economic impact of CE.
Hello again. Oops. Oh yes, there we go. So the CE data, it's a smaller study compared to a sample compared to other studies, but it is small but mighty. The CE data determines the poverty threshold for the U.S. government supplemental poverty measure. The CPI is determined in part from the CE data, as Mika touched on, and the CPI is the most widely used measure for inflation. Several agencies use CE data for critical estimates. They use it for the U.S. Department of Agriculture uses CE data to help estimate the cost of raising a child. The Department of Defense uses it to update the cost of living adjustment, or COLA, for military families. And the Center for Medicare and Medicaid Services uses it to estimate American spending on healthcare, including out-of-pocket expenses for hospital care. And finally, the Bureau of Economic Analysis uses CE data to help measure personal spending for the gross domestic product. I have a video.
Want to know how much the prices of groceries are changing in your area or across the nation? Or maybe how much the price of gas, electricity, or rent has changed? The Consumer Price Index, or CPI, answers these questions. It's the most widely used measure of inflation. Inflation is important to track because it tells you the spending power of your dollar. For example, imagine in 1996 you purchased a basket of goods that cost $65. The CPI shows that the same basket of items cost $84 in 2006 and $100 in 2016. An accurate CPI is crucial because businesses and government use it to evaluate the performance of the economy and make informed decisions that impact you.
All right. So now that we've learned a little bit about inflation, I want to ask a question of what you think. How do you think the average airline cost as for a ticket for a flight has changed over the last 50 years? Do you think it increased, decreased, or stayed the same? And looks like the poll has been opened. And we had a few answers there, but it looks like the vast majority said increased. Okay, now let's look at what we have here. So it looks like that in looking at the non-inflation adjusted cost, it looks like it has increased from $48 in 1963 to $378 in 2022. Now let's include inflation in here. With inflation adjusted dollars, the price of airfare was on average in 1963, $437 compared to $378 in 2022. So it actually decreased. So that's the power of inflation. What is the buying power of your dollar? And now I'm going to pass the presentation on to Rob. Thank you so much.
Thank you so much, Samantha. Good afternoon, everyone. My name is Rob Simon. I work on a state finance and quarterly tax survey here at the Census Bureau. And I want to start by talking about the annual survey of state government finances, ASFIN for short. This survey provides finance data for all 50 states. It also includes national totals of state finances, in essence, just the sum of the 50 states. There are three main categories of finance data that are collected in this survey: expenditures, revenues, and debt. Most of the collected data is already public, meaning you can go to the state website and download financial reports to extract the data. However, no two reports are alike. For instance, what one state calls an expenditure, another state might call a negative revenue. Some states might lump forest fire prevention activities with emergency disaster management. Those are separate categories in our survey. ASFIN not only puts the finance data all in one place, but it also classifies the diverse data into functional categories that are common across all states. It essentially creates a unifying classification system. I didn't put all of the functional categories, but I did put some here so that you can get an idea of what I'm talking about when I say functional categories. Some examples are judicial and legal, highways, public welfare, hospitals, natural resources, higher education, etc. The first link I've provided takes you to the survey's main page where you can get the data tables and the technical documentation for ASFIN. Many of our users have specific intentions regarding how they want to use our data, so for them, obtaining these tables is their go-to. But what if you aren't sure how to use it? One of my colleagues created a visualization which might help spur some interest and answer some questions with the summary data. Say you want to know which states prioritize education spending relative to other states, which states prioritize hospital spending relative to other states. We can learn a lot about a government's priorities by looking at how they spend their money. So here you can see the visualization that my colleague created. You can toggle between, I think there's about 12 different functions there for fiscal year 2022 or 2023. So for each of these functions, it'll show by state the percentage of expenditure that is spent on that function. So we're going to look at education in fiscal year 2022. So when we do that, we can actually see that Utah and Alabama spend the highest percentage of their expenditure on education. Utah spends about $28.3 billion every year on it. On total, just over $12 billion of which is spent on education. If we look at Alabama, they spend about just over $37 billion every year and about $15.5 billion on education. Next, we'll look at hospitals. We can see that Kansas and New Mexico come out on top. So Kansas spends about $23.4 billion every year, $3.4 billion of which is spent on hospitals. New Mexico spends about just over $28 billion every year, $3.6 billion of which is spent on hospitals. I'm going to go back to the presentation here. So what you may be thinking of isn't a lot of education spent on a local level. Most of us pay property taxes, and those property taxes are generally collected by our local governments, counties, cities, towns, and even school districts themselves in the case of Pennsylvania, New York, or parishes in the case of Louisiana. Those entities spend the property taxes to fund the schools. We have a similar survey, the annual survey of state and local government finances, which measures the same things as the state government survey, but includes local government revenue, expenditures, and debt in the tabulations. If we look at education spending as a percentage of total expenditures while including local governments, we get a different picture. Utah and Alabama were the top two when we looked at state-only education spending. However, when we include local governments within each state, New Jersey and Vermont come out on top. Similarly, if we include local expenditures when looking at hospital spending, we get a different picture. Kansas and New Mexico were on the top for state-only spending, but Alabama and Mississippi are at the top when we include local governments. I've included a link to this data in the associated technical documentation. Unit level data allows for two things. First, it allows you to focus on a specific government level that matters to you. Second, it allows you to look at specific items that concern you. One example I have here is Code 45, known as toll highways. I've included the definition from the classification manual as well. Every item that ends in 45 relates to the maintenance, operation, repair, and construction of highways, roads, bridges, ferries, and tunnels operated on a fee or toll basis. So A45 is a revenue code. It includes revenue from things like ferry tickets, toll road fees, toll bridge fares, and late fees. E45 is an expenditure code. It includes most of the expenses related to the maintenance of toll roads, bridges, and ferries. This includes salaries, maintenance. This includes expenses related to the maintenance of toll roads, bridges, and ferries, salaries, maintenance, enforcement, weatherproofing, and snow cleanup. F45 is another expenditure code. This includes construction equipment and land expenses. Next, I want to move to my favorite survey, the quarterly summary of state and local tax revenue, or QTax for short. QTax provides quarterly estimates of state and local government tax revenue at a national level. It does so for four major tax categories: property tax, sales tax, individual income tax, and corporate income tax. The quarters are on the calendar year. Quarter one is January to March, quarter two is April to June, quarter three is July to September, and quarter four is October to December. The data is released approximately 2 months after the most recent quarter ends. Further, the survey provides detailed tax revenue data for all 50 states and the District of Columbia. There are 27 categories of tax data. It includes major categories like sales tax, individual income tax, corporate income tax, secondary categories like tobacco tax, alcohol tax, and motor fuel tax, and also more minor categories like amusement tax, public utilities tax, and death and gift taxes. Next, I want to highlight a data tool provided by census.gov. I've provided a link in this slide. So if we look at this tool, we can get all data going back to 1992, going to the current most recent available data, which is 2025 quarter one. The best way to look at the data is to select table 3, which is state tax collections by state and tax type. We could then select total taxes or any one of the 27 tax categories. We can select the US total or any one of the 50 states. For this example, we're going to look at gas tax, or motor fuel tax to be specific, and we're going to look at California, since everyone is always talking about the high gas prices there. So when we hit get data up, and let me just look at the last 10 years of data. So let's adjust that real quick. When we hit get data, we can quickly see the quarterly revenue that California brings in for the last 10 years. Maybe this is sufficient for you, maybe not. You can export the data to a text file, an Excel file, you can get a quick bar chart, or you can pull up a line chart. I prefer the line chart. I think that's the best way to view the data. So when we do that, we can quickly get a visual of how that revenue has changed over time. We can see California, the revenue has been increasing. We can also see that there's some seasonality to the data. Looks like in Q1 every year, they experience a little bit of a drop in revenue. This most likely indicates that people are driving a little bit less during the winter months, so they take in a little bit less revenue. I think another interesting case is to look at Georgia's gas tax. There's some interesting stories there. I'm going to quickly look at that and pull up the line chart. So we can see that there's some huge drops in revenue in 2022, again in 2023, and a small drop of revenue in 2024. Now there's some stories there. In 2022, after the Ukraine-Russia war broke out, gas prices started soaring, and the governor of Georgia decided to give residents a gas tax holiday to give them some economic relief. And then, so that the first measure was from March 18th to May 31st, and subsequently after that, the governor kept extending that gas tax holiday and extended it all the way through the end of 2022. So for almost 3 straight quarters in 2022, Georgia did not take in any revenue, and they missed out on about $750 million. Then in 2023, inflation was soaring, and the governor instituted the same measure to provide economic relief to Georgia residents. Finally, in 2024, Hurricane Helene hit, or I think it was Tropical Storm Helene, excuse me, and the governor gave residents a 14-day gas tax holiday from October 3rd to October 16th. So about 12 out of the 90 or 91 days in that quarter, they didn't receive revenue. Next, I want to highlight an experimental product which measures cannabis excise taxes. This is a product closely related to our quarterly tax product, as the quarters are the same and the data is released at the same time. We began collecting this data in the Q3 of 2021. We have cannabis excise tax revenue by state for every quarter since then. The data includes recreational and medical cannabis excise taxes. In fact, states often have different tax rates for recreational and medical cannabis. The data does not include cannabis licenses. Here's what the data table looks like. It's pretty simple and easy to understand. The X means there is no such tax for that state. So even though Hawaii has a legal medical cannabis market, the state does not impose any specific excise tax on it. If a medical patient goes to the store in Hawaii to buy their cannabis medicine, it is taxed at the regular sales tax rate, just like if they were to buy socks or shampoo. I think it's an important distinction that I want to emphasize. Simply because a state does have a legal cannabis market does not mean our data will reflect that. Our data is meant to show specifically cannabis excise taxes that are imposed and collected by the state, often on top of the regular sales tax rate. It is also important to note the zeros for Alabama and Delaware. Both states have created a legal mechanism through which the state can collect cannabis excise taxes. However, both states exist in legal limbo at the moment. Things are being challenged in court and no sales license have been issued. So technically there is a tax, but nothing is being collected related to it. Next, I want to create some listener engagement. Which states do you think rely on cannabis tax revenue the most as a percentage of total tax revenue? Please use the polling feature to pick an answer. The options are California, Washington, Oregon, New York, Michigan, Montana, Alaska, and Colorado. 3, 2, 1. And it looks like So a lot of people picked Oregon, Colorado. So those are good answers. This is a screenshot of an interactive visualization that we have published on census.gov. It shows various tiers concerning cannabis tax makeup of total tax revenue. There are only 4 states where cannabis taxes make up over 1% of total tax revenue. As shown in that poll, you're probably expecting Colorado and Washington, but you probably weren't expecting Montana and Alaska. These states don't collect a lot of taxes in general. In fact, Alaska doesn't have a sales tax or an individual income tax. Traditionally, a good part of the revenue comes from severance taxes, taxing on the mining or extraction of oil, but that has slowed in recent years. So as a result, they have found some other smaller sources of revenue, like cannabis. Next, I want to circle back to our Q-Tax survey and highlight the newest tax code in our data, sports betting taxes. Our tax code T18 lumps pari-mutuels, which is horse racing and dog racing, with sports betting. However, the majority of the revenue in this category is certainly sports betting where it is legal. 45 states, as well as the District of Columbia, have legalized some form of sports betting and/or pari-mutuels. Data is available from the third quarter of 2021 through the first quarter of 2025. Another engagement question. Which state collects the most sports betting tax revenue? Please use the polling feature to pick an answer. The options are Pennsylvania, New Jersey, Texas, New York, California, or Florida. And you have 10 more seconds to provide an answer. And it looks like the majority, or the most picked answer was New York, which is the correct answer. New York is by far and away the winner. They are a large state, plus they tax sports books at a huge rate. 51% of all sports books profits go to the state in the form of taxes. Other large states like Texas and California don't have sports betting. They do have pari-mutuels, but it is not a big revenue generator. Florida has sports betting, but is solely operated by the Seminole tribe. They have a revenue sharing program with the state, and because of that description, it is captured in our annual survey of state government finances as a revenue rather than as a sports betting tax. You can see other states which collect a lot from sports betting are Illinois, Massachusetts, Ohio, Maryland, Pennsylvania, New Jersey, North Carolina, and Virginia. I want to highlight the explosion of sports betting associated revenue in the last 4 to 5 years. The line graph shows total revenue across all 50 states plus DC from sports betting and pari-mutuels. When we first started collecting in 2021, fewer states had sports betting, and the total revenue was less than $200 million. In early 2022, New York entered the sports betting market. They took in $166 million in their first quarter and now regularly receive over $300 million per quarter, as you saw on the last slide. In early 2023, Ohio entered the market, and they now regularly receive $40 to $50 million every quarter. And finally, in early 2024, North Carolina and Vermont entered the market. Together, they take in close to $50 million combined per quarter. I also want you to pay attention to quarter 4 every year, the shaded area. You will notice that there's a bump in revenue during this quarter. This is because all 4 major sports have action during this time. It's the middle of the NFL season, the MLB playoffs are taking place, and the NBA and NHL seasons have started. So there's a lot of sports action occurring during this time, and the revenue reflects this. Likewise, the revenue experiences a little bit of a lull during the summer months when only baseball is occurring. Finally, I want you to note that in the first quarter of 2025, total revenue surpassed $1 billion. You can look for the second quarter 2025 data release on September 11th. To end things, I want to discuss how our data is used. While the Consumer Expenditure Survey that you heard about earlier is a key input to the Consumer Price Index, the annual State Finance Survey and the quarterly state tax surveys are key inputs to the government component of gross domestic product. Specifically, they help the Bureau of Economic Analysis create estimates for government receipts, government expenditures, government consumption expenditures, and government investment, all of which are components of GDP. These surveys also help the BEA create estimates for personal income and outlays, which is part of the BEA suite of national statistics. Further, the quarterly tax survey is used to create regional estimates of GDP and GDP by industry, along with other forecasting and benchmarking activities. And now I'm going to send it back to our host, Linda Lee, for a question and answer session.
Thank you all.
Thank you all.
Thank you, Rob. So thank you everyone for your interest and time in attending today's webinar. Thank you, Mika, Samantha, and Rob for presenting our audience with helpful information and resources about the consumer expenditure surveys and programs from the public sector and how it can be helpful in decision making. Now, today we featured a small fraction of data and data tools. To learn more about statistics and tools, please come visit the Census Academy for the recording of this webinar and other webinars and other resources as well. Please take note of the contact information on this slide. For anyone that may be interested in a hands-on in-person training, we have data dissemination specialists that are available to provide this service to you. If you have questions or need more information after this webinar, please feel free to email us at census.askdata@census.gov. And to ask your question now, please submit your question using the Q&A feature, and we'll read the question aloud for the speakers to respond. Now, you may also hear other voices in the room as we have experts from our program areas here to help out with answering the questions. And also with respect to everyone's time, if we are unable to answer some questions, please feel free to use the contact information on this slide and send us your questions and we will get them answered. So let's go ahead and look at the Q&A queue and see if there are some questions coming in. Okay, so we have a question for you, Rob. Are all states providing all the data? What is the delay between collecting and publishing data?
Sorry, Linda, can you repeat the question one more time?
Sure. So the question is, are all the states providing all the data, and is there a delay between collecting and publishing the data?
So our data is published about 2 months after the quarter ends. I would say most of the states provide data to us. Some states do not have an imputation process. Fill in the gaps for states that don't provide the data.
I'm not sure offhand exactly what our response rate is. Assuming we're talking about for tax, I think it's pretty high. And for state finance, I think it's almost 100%.
All right, thank you, Rob. Let's see if we have additional questions coming in. All right, at this moment, I do not see additional questions coming in the queue. And I would like to express our thanks to everyone again for attending today's webinar. I'm going to toss it right back over to our facilitator, Stacy. Thank you, everyone. Have a great day. Bye-bye.
This concludes today's webinar. Thank you for your participation. You may disconnect at this time.